It's time to spotlight crypto trading after SoFi announced it's rolling out and becoming the first bank to offer a crypto trading platform to its retail clients. Joining us now to discuss more is Brian Huang, co-founder and CEO of Glider. Brian, thanks so much for taking the time to be with us. I'm really looking forward to hearing your thoughts. SoFi becoming the first nationally chartered bank here in the U.S. to offer this retail crypto trading. What is this move like for, I guess, the industry on the whole first?
Yeah, well, first, Marley, thanks for having me. The real question here is, one, it's great that they're embracing crypto and bringing it to a more retail, traditional finance audience. But who is this for? Right? When we think about SoFi's user base, it's mostly millennials. And these are the millennials who already have access to Robinhood, who already have access to Coinbase. Even if they're on the older side, they have access to traditional brokerages that also offer ETFs for trading. And so, it's a real question of like, why did they build this? Who is it for? And so, I would love to see the adoption over time, but it's yet to really cause any dent in sort of my mind for what this will provide for their users.
And you've made a comparison between this and PayPal's crypto product, which I guess part of your thesis is also something that doesn't have a great user base to it. Walk me through the correlations there, because I don't think of SoFi and PayPal in the same thought.
Yeah, I mean, think about your traditional retail trader buy and sell. I think what we're starting to see now is what we might call crypto washing. You're familiar with this in the AI space. Every tech company wants to say, I've got some bit of AI, and that for whatever reason will boost my earnings and revenues. We've yet to see a lot of that play out. Mark my words, this is the beginning of a lot of crypto washing. SoFi is now trying to tack onto the trend of, all right, we're offering crypto, on-chain finance is the new wave, we better be ahead of things. Unfortunately, it's late. And a lot of the times these companies are having difficulty attracting talent who will build on-chain, because would you rather work at a SoFi or would you rather work at a Coinbase? And quite honestly, the talent will want to work at places that are embracing and have always embraced on-chain crypto. And so that it puts them in a tricky spot. I think a lot of these companies are going to have to acquire in order to keep up with the pace of innovation that is occurring at the Coinbases and the Robinhoods and even smaller startups like our own. So yeah, it's an interesting time for sure.
So you mentioned a lot of these native crypto platforms that we're already widely discussing, they're already widely adopted. Do you think that there's any appeal that this is offered by a bank, a traditional bank, that there's any sort of safety component here in that? I know that I was reading SoFi's announcement, and their big pitch is about safety. I mean, these are FDIC insured accounts here. Is there a user that will appear to as opposed to those native crypto platforms?
I would argue no. As you probably know, your deposits in Robinhood are FDIC insured. If you go onto Coinbase today, Coinbase is a public company. We're not dealing with a random offshore exchange at this point. All of their treasury balances, their user receipts are non-commingled. Like they are, at the highest level of standards that are required for a crypto exchange. And so, what does this look like for a SoFi being a bank? Not a lot. I mean, I think quite honestly, like what we saw yesterday on CNBC is that SoFi's CEO was pitching the fact that now you can earn yield on your dollars and then use those dollars to buy Bitcoin, ETH, and Sol, the only three cryptos that they're offering. But if you didn't know this already, like you can go on Coinbase and you can access incredibly high yields on your dollars. In the US right now, you can get 7% yield on your dollars. And that is something that SoFi is nowhere near, right? They're probably offering like 3.75, close to Fed funds. And so I don't really know how they compete with that, right? Like you need to be able to access these yields that are coming specifically from DeFi. And it's far more enticing for these retail users that are very much the same user base that SoFi has already.
So you mentioned that that's not innovative. I also saw that interview as well. So if that's not an innovative feature here, and you're talking about this crypto washing, and that now being involved in crypto trading is the new buzzy trend, is this, do you think, potentially just a marketing ploy, or do they really view this as a growth avenue?
Look, I mean, they'll generate some revenue from this. Like, let's be honest. I think for retail investors, you should be very mindful of the prices that you're getting. When you trade on PayPal, for example, the price that you're getting is not the same price that you will get by going directly to a Coinbase or a Robinhood. And you should be mindful of that. I wouldn't be trading size through PayPal or trading size through SoFi. They are most likely capturing some amount of spread in that. And that means that you are not getting the best execution you could possibly be getting.
And SoFi has also hinted that they might potentially launch their own stablecoin or potentially even a crypto-backed lending, which of course could come into play if we start to get approval on these crypto-backed 50-year mortgages that are being proposed right now. From your vantage point, is that a realistic next step, or are they getting a little ahead of themselves here?
I mean, everybody wants to have a stablecoin these days. I think that's kind of a problem when you have a lot of fragmentation of liquidity, right? If SoFi has a stablecoin, how do I turn that stablecoin into a dollar that, my bodega down the street or my grocery store will accept? There's a lot of building that has to go into that. You need to have market makers to be able to convert between one stablecoin and another. You need to have different rails to allow people to buy your stablecoin in the first place. How do I get dollars actually into this thing? I get it. Look, stablecoins are an incredible business, right? If you look at Tether, if you look at Circle, right, they have built massive market share in this space. But the idea that anybody is going to go and build a stablecoin for mass market appeal, I think is more marketing than it is actual reality. Again, Circle and Tether have like 90%, 90+% of market share there, and I don't see that changing anytime soon. The fact of that comes from that Tether is linked directly to Binance, and Circle is directly linked to Coinbase. And if you don't have those sort of like exchange pairings, right? Every currency that you trade on Coinbase can be linked with USDC, so it's USDC Bitcoin. It's hard to get that like liquidity or demand for your stablecoin. Like I just don't see it.
Well, Brian, we appreciate you being with us to break down this announcement from SoFi and also offer your perspective there. Brian Huang, co-founder, CEO of Glider.